how's it going everyone? Today we'll be going over 3 simple steps to derive your daily bias. So first of all, it's really important that you understand there are only 2 functions of price. So price will either rebalance inefficiencies or seek liquidity, and that can be in the form of old highs and old lows. Okay, so the next weekly candle. The key to understanding daily bias is understanding where we are coming from and whether we're going for the previous week's high or the previous week's low. If you can know this, your daily bias will be spot on. So the reason why I put so much emphasis on the next weekly candle is because on the daily chart, right, you're not always going to be able to read the next candle. There will be days where price is very hard to read, and there will be days where price is consolidating, or there's low volatility in the markets, or there's no one-sidedness. On them days, all you're going to do is just sit out and wait for price to show its hand. By sticking to the higher time frames, like the weekly, even the monthly if you wanted to, you can really understand where price is wanting to engage, where it wants to expand towards. Okay, and now the third step, which is essential in trading, we must have patience, okay? If the daily is bearish and the weekly is bullish, there is no reason for you to engage. You simply wait for the daily chart to realign and then we'll engage. It's very simple. Focus on pro trend moves only. These are the most high probability moves. There's no need to catch these little counter trend scalps or intraday trades, whatever you want to do. It's just not needed. Okay, we want to focus on the most high probability trades, and we want to focus on managing our capital and preserving it like professionals. Okay, so let's dive into an example. So here we are on the weekly chart. As we can see, we've cleared some buy stops and then we've displaced a bit lower, creating a fair value gap. We can see that price taps into this fair value gap on the current weekly candle, and now we have to ask ourselves, where are we going towards? For the next week, are we going to go higher or are we going to go lower? So as you remember, I gave you 2 functions of price: either rebalance inefficiencies or move to liquidity, right? Here, we have already rebalanced this inefficiency here in the form of a fair value gap, and we have this previous week's low as a form of sell side liquidity. And if we look just a bit lower, we have another swing low here with more sell side liquidity resting in the form of sell stops. Okay, now if this isn't too clear for you, we can always dive into the daily chart just to get a bit more of a bird's eye view. Okay, as we can see on the daily, we have a bit more of a narrative going on here, right? So this fair value gap on the weekly is actually an order block, right? On this daily chart here, as you can see, this last up blue candle, and then we had the displacement lower, and our price has returned into it. Additionally, we've swept the previous weekly high, and we've left a very big rejection wick on this candle. So what that's telling me, right, is that price should be going lower now. Okay, we have a good narrative and we understand why price should move lower. We have confluence of that weekly candle expansion, and we understand there's sell side liquidity in the form of a previous weekly low to be taken. Okay, so I'm now going to move on and show you the results of that weekly expansion and how it looked on the daily chart after the week had completed. So as you can see, Monday went straight for that draw on liquidity, the previous weekly low. So after this, we need to ask ourselves, is Tuesday going to continue lower, or are we going to get a reversal, or should we just sit out and wait for price to become more clear? So after a big rejection on that Monday candle, a lot of you may feel uneasy to continue to short, so there's nothing wrong with just waiting out and let the daily candle develop a bit more. If you waited for Tuesday to pass, you can see we've closed with a very nice rejection on the upside, right? A very big wick. To me, that's signaling we should go lower. Okay, there's more incentive to go lower towards our overall draw on liquidity in the form of sell stops. Okay, so on Wednesday you could have shorted and targeted Monday's low, right? So that was a very nice clean short opportunity. So as you can see, on Thursday and Friday we closed the day with a lot of indecisiveness, right? There was no clear bearish candle. The candles did close bearish, but they were not very convincing, and there was no significant expansion on the closure. Alright, so now we're going to hop into the charts, and I'm going to show you how the following week played out and how we could have capitalized on that. Okay guys, so here we are on the weekly chart. This is the weekly candle I just outlined to you guys on the presentation. Now we're going to try to understand, is the next weekly candle going to go bearish for these sell stops, or are we going to get a reversal? So as you can see, we had a very nice candle closure beneath this previous weekly low, and we had a nice closure beneath this swing low here. So what we need to understand is, where is price originating from? Where does this expansion derive from? So as we can see, we had that inefficiency fill here, and then we had a nice expansion. So what we understand is price is still in this expansion phase. So now let's go into the daily chart, add some lipstick, and understand how we can get involved. Okay, so here we are on the daily chart. This is the prior week's price action. So as always, we're going to mark the previous weekly low. If I just draw that as a dotted line. And then we're going to mark the previous weekly high, right? Which is this Monday's high. So this is the range we're working within. We want to understand, is price going to go for the draw here or down here? So the previous weekly high or the previous weekly low. Okay, so now let's mark our PD arrays, right? So what do we have? Here we had a run on stops and then a break lower, making this our breaker block. Okay, we had an inefficiency in here. Let's draw that out. Just above Monday's high. And if you look all the way to the left, we actually have this fair value gap that we've traded through, and now we could use this as resistance. So if I extend this out, there we go. So you can see your price has traded through this level, came back into it, rejected once, rejected twice. So we may come back into this for a third time and then reject even lower. Okay, so as always, me personally, I love to skip Mondays. The reason I skip Mondays is because I allow Monday to show me the true tone for the week. I let Monday show me where price is tipping to, and usually on Mondays we get that false move, also known as the Judas swing. This is when price trades against the weekly intention just to manipulate orders, and then we'll go in the true direction for the rest of the week. So as always, let's skip Monday, and here we are. We can see that Monday has traded into this old FVG here, and we got a closure above Friday's high, but nothing too convincing. So for me again, I will still let another day pass. Okay, nothing is too clear for me, so there's no reason for me to go and short the market just yet, or to go buy the market into this previous weekly high. Okay, there we go. So now Tuesday, we get a run above Monday's highs and a failure to displace, right? We failed to close with any volume. In fact, we didn't even close at all. We then took this low here, and now we are in line with our draw and liquidity, right? Price is now clearly bearish. And we've also created this order block. So for me now, following day, Wednesday, I'm looking to short the market into this level. So if you play that out, there you go. Wednesday pierces this level, and then we get instant rejection. So again, for me now, I will sit out. Price has tapped into this order block, but this big rejection on the downside is not too convincing for me. I don't want to short the market just yet. There we go. Thursday has a nice bearish reaction out of this order block. So now for me, the clear draw on liquidity is Wednesday's low. This is the most obvious thing and the clearest thing that I can decipher right now. And just like that, Friday pierces straight through that low. Okay, so now you might be thinking, well wait, we've done a lot of waiting, but we've not taken many trades, there's not been many opportunities. The third step that I put emphasis on was patience. It is so important to be patient, and you must be fully convinced as of where price is trading towards. When we can understand that and we have a clear daily draw on liquidity, you will walk the 15-minute or the 5-minute chart like it owes you money. It's very simple. And as you can see, I haven't been calling no crazy moves, haven't been trying to catch 1,000, 2,000 pips, nothing stupid. I'm just simply understanding where that next candle should form. Will it go for the previous weekly low or the previous weekly high? And then the same thing on the daily. Are we going for the previous daily low or the previous daily high? That's all it is. Very simple. Small movements on larger time frames or big movements on smaller time frames. Okay, and just before we end this video, we are currently running a giveaway for 3 free spots to our Spectre Academy, and anybody who purchases the membership within the first week will get a free additional month at no extra cost. So that's 2 months for the price of 1. If you would like a part 2 to this video where I can go more in depth and perhaps even show how we can get involved on the lower time frames, please leave a like and I will make sure that comes out as soon as possible. Thank you for watching.